This is the AI News Flash for July 3rd, 3 a.m. UTC. First up, the chip industry group SEMI has urged the U.S. government to avoid moves that would distort the memory market, according to Bloomberg. In a letter to senior officials, SEMI asked the administration to let companies keep striking long-term agreements with customers and to extend tax breaks aimed at increasing U.S. output rather than imposing more tariffs. The concern stems from the Section 232 semiconductor tariffs the Trump administration began in January. The first phase set a 25% duty on a narrow set of chips, and a second phase is expected to raise rates sharply while adding an offset program to reward firms that invest in U.S. production. Memory prices are already surging. RAM chip prices jumped 90% in the first quarter of 2026, driving up the cost of PCs, laptops, and smartphones. By July 1st, the Commerce Secretary was due to deliver an update on the data center chip market that could shape whether the tariffs are modified. Next, Nvidia has floated a financing program to help emerging AI cloud providers fund their data center buildouts, the Register reports. Under the scheme, Nvidia doesn't lend directly. Instead, it brokers deals between the providers and third-party lenders. Nvidia then earns revenue twice, once from selling the GPUs, and again by taking a share of the cloud service revenue those chips generate. The named examples include ShareandTake AI, an Australian sovereign AI cloud planning to deploy 40,000 GB 300 GPUs, and Firmus, which this program reported in June, deploying up to 170,000 GPUs at a 360 megawatt site in Batam, Indonesia. Critics are less impressed. They call the model double-dipping and a form of circular financing, tying it to wider concerns about an AI bubble as startups without access to venture capital chase data center funding. Nvidia declined to share further details. That's all for this AI News Flash.